A guide to completing Form 56 and managing private bank authorization. This guide explains how to fill out IRS Form 56 and manage private bank authorization effectively. It is based on recent discussions about these processes and includes practical steps for transitioning financial control into a private trust or entity. Understanding IRS Form 56. Form 56 is used to notify the IRS that you are assuming a fiduciary role, such as executor or trustee, for a specific entity or trust. This form is critical when asserting control over your Social Security trust or other financial accounts. Key points to consider. Designation. When filling out Form 56, list yourself as the executor or fiduciary for the trust associated with your Social Security account or similar financial resources. Authority start date. Use the date you turned 18 as the effective start date of your fiduciary role. Notification. Submit Form 56 to all relevant parties, including the IRS and state agencies, to ensure they recognize your role. Practical application of Form 56. When you submit Form 56, you can cancel unauthorized fiduciaries acting on your behalf. Assert your position as the senior fiduciary or executor. Gain control of financial resources and liabilities tied to your accounts. For example, if you receive tax bills or fees related to property or vehicles, you can use Form 56 to shift financial responsibility back to the state or appropriate party. Using IRS Form 1099 Series. The IRS 1099 forms are essential tools for managing financial accounts and reclaiming assets. Here are the primary uses. Form 1099-A. Use this form to report acquisition or abandonment of secured property. For example, you can claim abandoned funds tied to your accounts. Form 1099-C. Report the cancellation of debt. This form can be used to resolve outstanding liabilities like property taxes. Form 1099-B. This form is for reporting transactions involving securities and other financial instruments. To maximize effectiveness, accompany these forms with Form 56 to assert your fiduciary authority over the accounts. Benefits of private trusts. Creating a private trust can help you manage your financial assets independently. A private trust shields assets from public claims or taxation. Allows you to designate successors or beneficiaries. Facilitates asset transfers without traditional banking systems. When establishing a trust, consider using a 98 Series IN, employer identification number, which is recognized as tax-exempt and suitable for private trusts. Moving forward. To get started, contact your state Secretary of State or Banking Division for guidelines on creating private banks or trusts. Then, follow these steps. Fill out IRS Form 56 to establish fiduciary authority. Use 1099 forms to manage or reclaim assets. Create a private trust using a 98 Series IN for tax-exempt status. By following these steps, you can assert control over your financial resources while operating independently of public banking systems.